The landscape for the stock market has been drastically changed over the past couple of days, and it's been ever dropping since February. This is getting worse, and it's a very big overreaction. And the reason I say this is an overreaction is because when Trump announced the 10% baseline tariffs and the reciprocal tariffs that were going to take place against the EU, China, and Japan, and other countries, the stock market overreacted. And the reason they have done this is because historically, tariffs tend to weigh down on the economy in a negative way. So the markets, investors, institutions are taking this as a very negative situation and overreacting with fear and selling off. However, Donald Trump has taken a very different approach with tariffs. In fact, it's most likely due to multiple factors. One, trying to negotiate better deals. Ontario Premier Robert Ford said that if Donald Trump dropped the tariffs on Canada, they would want to drop and are willing to drop all tariffs on the states. All tariffs. This is a prime example of why Trump is doing this. This is just one reason to negotiate better deals for the states and put the United States in an advantageous position in order to get better deals with trade globally on import and export tariffs. And there's also a very important topic to discuss, and that's Donald Trump has likely utilized these tariffs to create a lot of panic, fear, selling, and high volatility in the market. This way, it will force the feds to drop interest rates. Almost all politicians and previous presidents think short term, like their current 4 years or less, this year, next year, today, tomorrow. It's very, very short term. The United States is refinancing over $7 trillion in debt. And when you lower interest rates from where it was, 5% to 4%, that 1% is a lot. And typically bonds are 20 to 30 years. So if you have $7 trillion over 20 to 30 years and you have a 1% or a 2% drop, that is extremely high. Donald Trump is doing something that most, if not almost all politicians do not do, which is prioritize long-term financial landscape for this country. However, you have to really understand the technicals, fundamentals, and understand your portfolio and how to put yourself in a position to lose less money and be safer, which we're going to talk about. If you want to learn very powerful strategies, how to hedge your portfolio and protect it in a market that is volatile just like this and make lots of money when the stock market goes up, which it's inevitably going to do, sign up for my free webinar Friday, April 11th, 6 p.m. Eastern, 3 p.m. Pacific. Link is in the information box below. I look forward to seeing you there. In a situation that we have right now, not all stocks are equal. In fact, there's going to be stocks in this volatile market that are going to go up. And the reason for this is certain stocks aren't affected by import and export tariffs. And one of those companies is going to be Coca-Cola. You have other companies like Ford, Johnson & Johnson, Colgate, Caterpillar, Kraft and Heinz, and other stocks that are going to be a lot stronger during times like this. The big key to understanding this market right now is which stocks are affected the most by tariffs. Would be Wayfair, Walmart, Amazon, Apple, stocks like this. These are the stocks that are affected the most. Stocks like Microsoft, not so much. Stocks like Coke, even less. And in the financial sector, JP Morgan, Wells Fargo, Citibank, Bank of America, MasterCard, Visa, these stocks are going to do a lot better. Specifically, Bank of America, Citibank, JP Morgan, these are very strong stocks. AT&T, Verizon, these are the stocks that you want to have your money in situations like this because they're a lot safer and because they're less affected by tariffs and by reciprocal tariffs. Import-export issues with other countries don't really factor into these stocks as much as others. This is a complete overreaction, and a pretty hefty one at that. When the markets, institutions, hedge funds, just overall, the market in general, realizes that people are still eating out, they're still driving work, they're still buying gas, buying food, buying amenities, paying their mortgage, paying their rent, paying their electric bill, charging things on their credit card, buying cars, things aren't really going to change. They're going to pretty much stay the same. Just import goods are going to be a little bit more expensive. And when these items that are they're imported are more expensive, that expense eventually trickles its way down and makes it into our pockets. And because of this, the prices are going to go up, which in turn is going to make it a lot more appetizing to buy American products. Just as an example, Ford, Caterpillar, Coca-Cola, things made here. Intel, which is another stock that did not go down. Nvidia and AMD dropped way more than Intel did, percentage-wise. And this is because Intel has multiple factories in 3 different states, and they also got a grant from the government, and they're the only chip manufacturer that makes their chips in the States. That's what this is all about. American companies that manufacture and service here. Those stocks are going to do very well. But this market is a complete overreaction. And like I said, when the market realizes that things are going on, life is going on, things are still happening, not a whole lot has changed, and the markets will recover sooner rather than later. And Jerome Powell is about to speak today. In fact, if you're watching this video, there's a good chance it's already happened. And if we get interest rate cuts, well, that is really going to help the market. But we also have to look at the fact that Jerome Powell speaks in the 3rd week of April. And then on top of that, all my wedges on the chart that I showed you in previous videos show a breakout potential for April 15th to 19th, which is right when Jerome Powell is speaking. But not only that, we also have Meta in a lawsuit for April 14th or 15th, I think it's the 14th, right around that time, and tax deadlines at that time. Everything is all at the same time that these wedges on all these different stocks look like there's a breakout that is imminent and about to happen. So in my opinion, it is likely that Donald Trump is using tariffs to barter better deals with countries and to get a much better deal with Canada and Mexico and get the things that he thinks are beneficial for this country while keeping a nice baseline to make it more fair for the United States, but to also force the feds to cut rates quicker and more often to get these interest rates down, which is really good for the stock market. Lower interest rates always incite buying and growth in the stock market. So by Trump doing this with tariffs, he's getting 1, better deals with foreign countries, 2, getting the feds to jump on the rate cut wagon a lot quicker and possibly more often. And then number 3, he's also using this to create a lot of strength for the U.S. economy long term, 3 to 5 years, 8, 10 years, 20, 30 years down the road with these bonds and the debt refinancing. So if we get the rate cuts, that's going to strengthen the market and strengthen the short term, while his tariffs will barter better deals for long-term growth, which is unprecedented in modern history. No other president's really done this. He's taking a short and a long-term approach. He's utilizing the long-term approach to leverage against the feds to force their hands to cut interest rates so it'll make up for the short-term disaster that's going on right now. And if that happens, we'll have a stronger short-term and a lot stronger long and near to mid-term coming up. So if that happens, we'll have a much stronger short-term, and the mid to long-term will be even better with more manufacturing, more drilling, cheaper gasoline prices. Remember, when he took office the first time, it took about a year and things were flying. There is a lot that goes into understanding all of this. I've been doing it for a decade just about, and this is a very important thing to understand when you're investing. Understand the companies you're investing in and how the current situation in the world, news, and the market affects that company. Look at your portfolio. If everything you have is chip manufacturers and foreign companies, or Amazon, Wayfair, Walmart, and you're in retail or you're in tech, and all of your portfolio is in those stocks, you need to balance them out a lot better for a situation like this. If you really want to learn how to do this even further and in more detail, and you really want to take control of your financial future and your investing, I promise you can learn. It's not that hard. I have a very unique way of teaching. If you guys want to take advantage of your portfolio, my free masterclass webinar, How to Become Profitable and How to Hedge Your Portfolio and Manage Risk in a Highly Volatile Market. Friday, April 11th. It is free, 6 p.m. Eastern, 3 p.m. Pacific time. I look forward to seeing you there so you can learn how to manage your portfolio and get better at trading and investing. and make more money and retire, which is the goal. So this way you can live the life that you want to live. The link for that webinar is in the information box below. At the end of the day, this is ultimately a buying opportunity. Whether it's a short-term, mid-term, or long-term buying opportunity, the market will recover. And when it does, it is going to be huge. When this market does run in the coming weeks, months, maybe later on this year or maybe early next year, when this happens, it is going to be huge, but it is highly likely to happen between now and the end of April. And it's really riding on rate cuts. And if Donald Trump is going to eliminate some tariffs, if he ends up getting the things that he wants in these deals that he is trying to pretty much barter with other countries to get. If he gets these things, maybe tariffs will loosen up. But importantly, the Fed's cutting rates. And of course, unemployment is very important. We need to be expanding in our services and manufacturing. And the only way to do that is to do what's best for the economy. We need better deals with other countries and global leaders, and we also need interest rates to be cut. And I believe that the overall sentiment and the overall emotion that is in the market right now will recover. I look forward to seeing you guys on the next video or upload. Take care of yourselves. See you in the next one.